Realization account debtor. So 10,000 is the realization expenses. So you just debit the realization account to bank account, being realization expenses paid. See, all the assets have to be transferred to realization account only with the exception of cash. So if cash is not taken over, don't transfer cash to realization account. We have just finished, we have closed the books of accounts of the selling company. Now we are opening the books of accounts in the new company, that is the Fabrics Limited. Hello everyone, I am Purnima, faculty in the Department of Commerce and Management, Vidhyaashram First Grade College, Temple of Excellence, MYSURU. I welcome you all to this session. In this section 6 of Unit 2, we will be working one more problem on amalgamation in the nature of purchase. Now let us see what is the problem here. Having proved unsuccessful, 2G Limited decided to wind up and sell to a new company called 3D Limited. Now 2G is the selling company and 3D is the purchasing company. The balance sheet of 2G Limited on the date of winding up was as follows. So 2G Limited is the name of the selling company and the buying company is 3D Limited. Now we have the balance sheet here. So equity share capital 10 lakhs, sundry creditors 1,50,000. Total 11 lakhs 50,000. Then we have the buildings 4 lakhs, plant 2 lakhs, sundry debtors 2 lakhs, stock 50,000, P&L account 3 lakhs, totally 11 lakhs 50,000. Then next we have here additional information. 3D Limited was formed to take over only the following assets. So they are not taking over all the assets, only the following assets. Now what are they? Buildings at 3 lakhs, plant at 1,40,000, stock at 60,000. Purchase price was settled by the issue of fully paid equity shares in the new company. Now, they have told us that purchase price is settled by the issue of fully paid equity shares, but they have not mentioned how many equity shares are being issued. So, we have to calculate the purchase consideration on the basis of net asset method. Here, the purchasing company is taking over only the assets of the selling company. So, the liabilities are not taken over. So, the liabilities are to be settled by the selling company itself. Now, for that, we have to pass an entry. Then, next, we have to calculate the purchase consideration based on the net asset method, and then we have to do the problem. So 2G realized debtors at 1,50,000 and settled creditors at rupees 1,10,000. Now, if the debtors are not taken over by the purchasing company, then the selling company only has to just sell the asset and get the cash. And in the same way, they have not taken over the creditors of the selling company. So the creditors have to be settled by the selling company itself. So the creditors have been settled at 1,10,000. Expenses of reconstruction amounted to rupees 10,000. Pass journal entries in the books of 2G Limited and show the new balance sheet of 3D Limited. Now, they have asked for journal entries in the books of the selling company and the balance sheet of the purchasing company. Now, let us see, before we just do the journal entries, we will just calculate the purchase consideration. Now, the purchasing company is taking over buildings at 3 lakhs, plant at 1,40,000, stock at 60,000. So, the total is total value of assets. Total asset value is 5 lakhs. Then liabilities take over. They are not taking over any liabilities. So, the purchase consideration is 5 lakhs. So, this purchase consideration is paid by the issue of equity shares in the new company. So, they are paying the purchase consideration in the form of shares in the new company. So, we should understand that purchase consideration is 5 lakhs. Now, we will go to the journal entries here. So, Journal entries in the books of 2G Limited. Now the 2G Limited is the selling company and it is closing down all the books of accounts. So whenever the asset accounts are being closed, it will be transferred to realization account. So realization account, we have to just transfer all the assets here. So realization account debtor. So this 8,50,000 is the total of all this amount. So 2 buildings account 4 lakhs, then 2 plant account 2 lakhs, 2 sundry debtors 2 lakhs, 2 stock 50,000. So the total of all the assets is 8,50,000. So we have closed all the books of assets of 2G Limited. Now, what the liabilities are not taken over, so we don't transfer any liabilities. Then what will be the entry? Suppose I write realization account. So then in the realization account, to assets. To assets, I write 8,50,000. So there are no liabilities here. When there are no liabilities, I write by 3D Limited. So what is the purchase consideration? 5 lakhs. Then, so this entry I am writing here, 3D Limited account debtor 5 lakhs to realization account 5 lakhs being purchase consideration due. Then next we have shares in 3D Limited account debtor 5 lakhs to 3D Limited account 5 lakhs being settlement of PC means purchase consideration. Purchase consideration. Then bank account debtor to realization account 1,50,000. So bank account debtor to realization account 1,50,000. So whatever you have realized, the debtors, whatever we have realized, so that we have to put it on the credit side of the realization account. The same way the creditors also. See the creditors, they have been paid 1,50,000. So their due is 1,50,000, but they are paid 1,10,000, and whatever is the difference amount of 40,000, so that we have to transfer it to the realization account being settlement of creditors. Then next we have the expenses of realization. So realization account debtor. So 10,000 is the realization expenses. So you just debit the realization account to bank account being realization expenses paid. Now the next will be equity shareholders account debtor to realization account. Now if I write the realization account here, I will write assets value 8,50,000. Then purchase consideration is 5 lakhs. Then if you can see the previous entries here, bank account debtor to realization account 1,50,000. So I write bank account 1,50,000. Then next we have the creditors account debtor to bank to realization. So in the realization account I write creditors 40,000. Then next I have the realization expenses. So realization expenses paid 10,000, that is debited to realization account. Then so whatever is the difference amount, that will go to shareholders account. So 8,60,000 here. Here also 8,60,000. So the difference amount of 1,70,000, that will be transferred to equity shareholders account. So equity shareholders account debtor 1,70,000 to realization account 1,70,000 being loss on realization transferred to equity shareholders account. So there is a loss to the equity shareholders to the tune of 1,70,000 which is transferred to realization account. Then equity share capital account debtor 10 lakhs to equity shareholders account 10 lakhs being share capital transferred to shareholders account. So the transferring the share capital to shareholders account. Then next equity shareholders account debtor 3 lakhs To profit and loss account 3 lakhs. See, this is the profit and loss account balance mentioned in the asset side of the balance sheet. So that we are transferring the loss. So it is a loss to the shareholders. So that loss has to be debited to the shareholders account. Then equity shareholders account debtor 5,30,000 to equity shares in 3D Limited. They are giving the shares worth rupees 5 lakhs to bank account 30,000 being settlement of equity shareholders. Now, if you write the equity shareholders account, I write by capital. So, what is the capital they have? See, transferring the share capital 10 lakhs. So, I write 10 lakhs here. 10 lakhs. Then, to profit and loss account. So, to P&L account. So, to P&L account it is 3 lakhs. Then, equity shareholders account debtor, 2 shares in 3D Limited 5 lakhs. Then, to bank account, equity shareholders account debtor, to bank account 30,000. Then, realization loss 1,70,000. So, when you add all this, you will get the total of 10 lakhs. So, the equity shareholders account should tally. Only if it is tally, only then whatever the problem you have done, it is correct. So, we have settled the equity shareholders account by paying shares of worth rupees 5 lakhs in 3D Limited. Then, next we have the balance sheet of 3D Limited here. So, we have the share capital 50,000 shares of rupees 10 each. So, this is the shares of the new company. So, that is the 3D Limited company shares rupees 5 lakhs. See, the creditors are being settled. So, there will be no creditors in the new company, and we don't have debtors here because the debtors have already paid the cash to the selling company, and so we don't mention debtors here. So, whatever the value of the buildings, plant and stock, whatever has been taken over, we write it at the same value. So, the total comes up to 5 lakhs. So, this is the balance sheet of 3D Limited. Now, we have the calculation of purchase consideration. Buildings 3 lakhs, plant 1,40,000, stock 60,000. Total is 50. There are no liabilities taken over. So, the purchase consideration is 5 lakhs. So, this is how we have arrived at the purchase consideration. Now, we go to the next problem here. So, problem 4. The Fibers Limited is absorbed by Fabrics Limited as on December 31st, 2020, on which date its balance sheet was as under. So, paid up capital 2 lakhs, debtors, so debentures 1 lakh, trade creditors 30,000, reserve fund 50,000, profit and loss account 20,000. Then goodwill 50,000, freehold property 1,50,000, plant and tools 83,000, stock 35,000, bills receivable 4,500, sundry debtors 27,500, cash at bank 50,000. Total is 4 lakhs. Now, this is the balance sheet of Fibers Limited. So, Fibers Limited is the selling company. Fabrics Limited is this is the purchasing company, and this is the selling company. Now, we have the additional information here. Fabrics Limited agreed to take over the assets exclusive of cash and goodwill. So, they are not ready to take the cash and the goodwill at 10% less than the book values to pay rupees 75,000 for goodwill and take over the debentures. So, they have agreed to take over the assets. So, they are not taking over exclusive of cash goodwill. They are taking over the assets at 10% less than the book value. So, whatever is the book value, they are taking it at 10% less, and to pay 75,000 for goodwill. For goodwill, they are paying 75,000, and to take over the debentures. So, they are taking over the debentures here. So, if you can see the balance sheet here. So, what is the goodwill here? Goodwill is 50,000 here, but they are ready to take over the goodwill at 75,000, and they are not taking any of this. They are not taking creditors here. So, they are taking over only the debentures. So all these assets they are taking over. Cash is not being taken over. Then the purchase consideration was to be discharged by allotment to shares of to the Fibers Limited, 1,500 shares of rupees 100 each at a premium of rupees 10 per share, and the balance in cash. So the balance in cash they have to pay, and they are ready to issue 1,500 shares of rupees 100 each at 110. So 1,500 shares into 110. So whatever is the amount, that will be the value of shares issued, and the balance in cash. So what is the cash balance? They have not told. So that we have to calculate. The cost of liquidation amounted to 3,000. Show the necessary accounts in the books of Fibers Limited, assuming the amalgamation in the nature of purchase. So first thing is we have to calculate the purchase consideration. So calculation of purchase consideration, total agreed value of the assets of the selling company taken over by the purchasing company. So only whatever the assets are taken over, only they have to be taken into consideration for purchase consideration here. So freehold property, the value of the freehold property is 1,50,000. 10% less is 15,000. It is 1,35,000. So plant and tools 83,000. 10% less 74,700. Then stock 35,000 minus 3,500, 31,500. Bill receivable 4,500 less 10%, 4,050. Sundry debtors 27,500 less 2,750. 24,750. Goodwill is being agreed to be taken over at 75,000. So this is the agreed value. So that we are taking it here, 75,000. So the total purchase consideration is, see, this is the total of assets value, total assets, 3,45,000. Now, less agreed value of liabilities taken over. So, no liabilities are taken over, but the debentures of the selling company are taken over. Only the debentures are being taken over, 1 lakh. So, the net value of assets taken over is 2,45,000. So, this is the purchase consideration. This is to be paid by the purchasing company. Now, in the form of shares, that is, the purchasing company is ready to issue 1,500 shares at a 10 rupee premium. So, 100 plus 10, 110. So, 1,500 into 110 is 1,65,000, and the balance in the form of cash. Now, we have already calculated the purchase consideration at 2,45,000. It is 2,45,000 minus 1,65,000. 80,000 will be the balance in cash, which is to be paid by the purchasing company. So, they are paying shares worth 1,65,000 and cash worth 80,000 to make up for the purchase consideration of 2,45,000. Now, here we have the ledger accounts in the books of Fibers Limited. So, first thing is the realization account. So, I transfer all the assets which are taken over by the purchasing company. I will transfer all the assets. So, at the balance sheet values, see, all the assets have to be transferred to realization account only with the exception of cash. So, if cash is not taken over, don't transfer cash to realization account. All other assets have to be transferred to realization account. To freehold property, to goodwill. See, goodwill is at the balance sheet value. So, all these are balance sheet values only we have to transfer. Then, bill receivables, sundry debtors. So, all the assets have been transferred to realization account. Now, in the liabilities, only debentures are taken over. So, that is why I am transferring it to realization account. Then, we have the Fabrics Limited account, 2,45,000. So, this is the purchase consideration which is paid by the purchasing company. Then, so we have the liquidation expenses of 3,000. So, the liquidation expenses, if it is paid, if nothing is mentioned, it means that the selling company is paying the liquidation expenses. So that is 3,000. So realization account added to bank 3,000 cost of liquidation. So when we just balance the account, there is a loss to the tune of rupees 8,000. So this loss is being transferred to shareholders account. Now next we have the Fabrics Limited account. So in the Fabrics Limited account, so this is the purchasing company's account. So to realization account 2,45,000, then by bank 80,000, by shares in Fabric Limited. So total is 2,45,000. Then next we have the shareholders account. So in the shareholders account, we transfer the share capital and the reserves and the profit and loss account. Whatever is there in the balance sheet, it will be transferred to shareholders account. So by share capital account 2 lakhs, by reserve fund 50,000, by profit and loss account transfer 20,000. See, all these amounts were mentioned in the liability side of the balance sheet. Next, this is the realization account. So the loss on realization 8,000. So that I am debiting it to the shareholders account. Then the shareholders, they are paid in the shares to the value of 1,65,000, and this is the value of the bank account. So to bank account 97,000. So the total comes up to 2,70,000 and 2,70,000. Now we have to prepare the bank account here. Why? Because the cash account has not been taken over by the purchasing company. So we calculate the bank account here. To balance brought down. So this is the balance given in the balance sheet 50,000. So by Fabrics Limited account 80,000. So we have received from the purchasing company 80,000. So that I have debited to the bank account 80,000. Now by realization expenses, so I have paid rupees 3,000 towards the realization expenses. So I am crediting the bank account. Then I have paid the creditors also 30,000. So whatever is the balance is 97,000. So this will go to the shareholders account. So the bank account balance, whatever is the balance, it has to be transferred to shareholders account. So 97,000, it goes to the shareholders account, and the bank account total is 1,30,000. Now in the next we have the note here. Let us see. As the creditors are not taken over by the purchasing company, the payment for them is to be required to be made by the selling company. So when the liabilities are not taken over by the purchasing company, it has to be settled by the selling company itself. So as the creditors are not transferred to the realization account for the payment, trade creditors and not realization should be debited and bank account should be credited. So we have to pay to the creditors, and if there is any difference amount, that difference only should be taken to realization account. Now we have the shares in Fabrics Limited account. To Fabrics Limited account 1,65,000, by shareholders account 1,65,000, being shares given to shareholders 1,65,000. Then next we have the journal entries in the books of the purchasing company. So we have just finished, we have closed the books of accounts of the selling company. Now we are opening the books of accounts in the new company, that is the Fabrics Limited. Now let us see how the journal entries will appear in the books of the purchasing company. So business purchase account debtor. So this is the value of the purchase consideration, whatever the purchasing company has paid. So that we will write here, business purchase account debtor 2,45,000 to liquidators of Fibers Limited 2,45,000, being purchase of business. So they have purchased the business by paying rupees 2,45,000 to the liquidators of Fibers Limited. Then next, whatever the assets are taken over, all those assets we have to just put it to the debit of the new company. So freehold property account debtor 1,35,000. See, all these are not balance sheet values. They are the agreed value of assets taken over. So freehold property 1,35,000, plant and tools 74,700, stock account debtor 31,500, bill receivable 4,050, sundry debtors and goodwill. So whatever you have transferred, whatever amount you have mentioned in the purchase consideration, the same amount you will mention in the books of the purchasing company. 2 reserve for bad debts 2,750, 2 debentures 1 lakh, 2 business purchase account 2,45,000, 2 for being assets and liabilities taken over at agreed values. Then next, we have the next entry. The liquidators of Fibers Limited account debtor 2,45,000, 2 bank account 80,000, 2 share capital 1,50,000, 2 securities premium 15,000. See, we should understand that the shares are issued at a premium of 10 rupees per share. So we have to show it as the securities premium account 15,000. So being purchase consideration paid to the selling company in the form of shares, cash and premium. Then we have a note here. As the debentures are taken over by the purchasing company, they have to be incorporated in the books of the purchasing company along with the assets taken over by crediting the debentures account. So we have to credit the debentures account. Then the debtors taken over are to be reduced by 10%. So it is assumed that 10% reduction in debtors are a reserve for doubtful debts. That is why for debtors taken over, debtors account is debited with the gross amount of 27,500 and the reserve for doubtful debts is credited with 2,750 rupees. Then the amount of share capital and securities premium have been arrived at as follows. The share capital, the face value of shares issued is 1,500 shares into 100, that comes up to 1,50,000. Securities premium, premium on the shares issued to the vendors, so that is 1,500 into 10, that comes up to 15,000. Alternatively, the total issue price of shares, that is 1,65,000, can be allocated between the share capital and the share premium in the ratio of face value of each and the premium of each share. So I can write 1,65,000 into 10 by 11, that comes up to 1,50,000, and 1,65,000 into 1 by 11, that is 15,000. So however you mention, if you can just understand this part, that is more than enough. This part is, even if you don't understand, it is okay. So because they are the same thing which are told in a different way. So with this, we come to the end of this session. Hope you have all followed it. Thank you.